Most of us make charitable donations throughout the year. It might be a small amount for a friend's fun run, or a more significant contribution to a cause that speaks to us. In most cases, we don't give much thought to how we donate. We log into a website, choose an amount, enter our credit card information, and out comes a tax receipt. But if you're looking to make a more sizable charitable donation, there may be a more tax-efficient approach worth considering. The CRA allows you to donate securities directly to a registered charity in kind, without triggering the capital gains tax. That means you avoid paying tax on the investment growth and still receive a full charitable donation receipt. Now, let's be clear. Securities include mutual funds, individual stocks, and ETFs. Let me give you an example. Susan. Susan owns $100,000 worth of a global equity fund. It's performed exceptionally well over the last decade. Her original investment was $40,000, which means she has an unrealized capital gain of $60,000. Today, she really wants to make a substantial gift to a charity that's close to her heart. If Susan were to sell her investments first and donate the cash later, she would trigger a $60,000 capital gain, which might result in a tax bill of $12,000. That leaves her with only $88,000 to donate. Or another way to look at it, it costs her $12,000 to make a $100,000 donation. And to me, that doesn't sit quite right. Now consider the alternative. Susan donates the investments in kind, meaning she transfers the units of the global equity fund directly to the charity. No capital gains tax is triggered, and she receives a charitable tax receipt for the full $100,000. The charity gets the full value, and Susan maximizes the impact of her generosity. It's a simple shift, but it makes a huge difference. A few important notes. This strategy only applies to non-registered investment accounts. It does not apply to RSPs or RIFs, because those withdrawals are fully taxable when they come out. TFSAs are also excluded because withdrawals are already tax-free. In practice, we don't transfer securities to the charity directly. Instead, a third party helps administer the process. In our case, Asante has partnered with a company called Benefaction. Once you transfer the securities to Benefaction, you get the full tax receipt and the funds are earmarked for charity. Then, at your pace and discretion, you get to choose the charity, the campaign, and the amount through their online tool. There are two requirements. First, the CRA stipulates that 5% needs to be donated each year. That's no problem. Second, Benefaction has a minimum account size of $25,000. In my eyes, this is a win-win with one small loser. You benefit, the charity benefits, and the CRA, well, they miss out on some tax revenue. But in this case, that's a trade-off most of us can live with. If you have any questions, feel free to get in touch.